Clay Patton on the Rural Radio Network as we take a look here at the weekly commodity trade. Glad to be talking once again. Darrell Holaday with Country Futures in Frankfort, Kansas. Darrell, this week really seems to have been a back-and-forth trade. You look at the grain complex, look at livestock. It seems like there was little data points that tried to move things, but maybe more of a macro market play. Interest rates definitely moving into traders' minds. Overall, though, what do you make of the week's trade and the major factors behind the move?
Well, we had on the grain side, it was interesting. We started the week, of course, a week late. Didn't trade Monday. And so the Tuesday trade was interesting on the grains that we were under some pressure early because the weather forecast indicated this trying to confirm this change in the Argentine weather pattern, which in the end ends up being correct. And so we were under pressure early Tuesday, but then reversed and went higher. So, and then Wednesday, we were higher early after that momentum off of Tuesday, and we reversed and went lower. So started with with two reversals, and once again, what was probably moving this thing back and forth or supporting the market early was certainly not the Argentine weather forecast, other than the fact it will still hot and dry, and it stayed that way till Wednesday and Thursday. But we had a lot of fun buying still going on. I know there's a lot of commodity indexes that came out late last week indicating they'd like to see some of their customers move from commodities owning equities to moving into some of the commodities, and so a lot of those index funds were in buying, and they were heavy buyers Tuesday and Wednesday, and a little bit, and even it was sprinkling around throughout the week, but it's certainly the heaviest part was Tuesday and Wednesday. That was fighting against this changing forecast, and of course the momentum also off the USDA report that came out last Thursday still was underlined or an underpinning to the market, especially the soybean complex and the corn. But once again, the corn moved up against that tough resistance, that 685 area, and really tested it many times, but came off of it. So that was somewhat refreshing. But the big move, what really, in the end, we moved the soybean complex lower on the week. Wheat was somewhat mixed, and corn was just, old crop up 1 and new crop down 2. So not a lot of move. The movement was over in the soybean complex, and especially in the new crop. So again, a lot of focus on the soybean meal market. There's been a lot of thought that maybe if this Argentina crop gets too bad or the drought is bad, that they sell a lot of end products, specifically meal, in the world market, and that people would come scrambling to the United States. And we have seen some bump up in the soybean meal export sales out of the United States, a good number even that came out for last week. It came out Friday morning. But I think as a whole, the Brazilian crop is really hanging over this market too, and that we had a lot of, we're starting to see harvest yields come in. They're just getting going. They're probably 3 to 5% done, and yields are extremely good, and the weather just couldn't be any better. They do get rain, but then they get chances to cut, and in the areas to the north which still need rain because they're longer maturing, they need to continue to have rain, and so it's just one of those years so far. It's just been perfect for Brazil. That's not true of Argentina, but it really, early in the week, it looked like we could very well see a significant weather pattern change late this week and then on in the next 2 weeks, and that really has occurred with the rain occurring on Thursday night, and now we've got rain into Friday, and we've got rain really in the forecast really the next 2 weeks. As a matter of fact, the 1 to 5 day is wet, the 6 to 10 day is wetter, and the 11 to 15 day is wetter than that in Argentina. Now, once again, you got to remember that's a later crop. Yes, there is some early planted stuff, especially early planted corn, what we call the earlier corn, that probably has been under stress, no question about that. But we got to remember they're only 89% planted on their corn, so there's a lot of corn you have to go in. In other words, the critical time's way out and headed in front of this market February, March, and even early April, depending on where you're at in Argentina. But the pattern change is what got the attention late, and that's why we saw the sell-off in the soybeans and even brought the corn, if you will, off the high end. Export sales this week were a little better. Once again, probably the best we've seen in over a month. The problem with it, I'm talking about, I guess you'd say, for corn and wheat. In fairness, though, that is a very low bar because the last month has been very poor. So we still have corn way behind the pace needed to meet the USDA projections. As a matter of fact, currently, if you look at Friday's numbers that came out, the total commitments on corn, which would be sales and shipments, are only 44% of that total the total projection for the year. Well, there's only been 1 year that's been worse than that. We would normally average, we were about 60%. So that the number's going to have to come down, especially if we don't see any sales in the next 30 to 60 days, because you get on into the needs for June and July, and those will all be being offered in Argentina and Brazil, especially if the weather changes in Brazil. On the soybean side, once again, the number's still good. It's right in there where we kind of need to be. The concern there would be that there's 5 million tons of unknown listed of soybean sales. Most people really believe most of that is China, and China is known that if you end up with a big Brazilian crop, that they'll come back and just cancel those unknown, those that they're listed under unknown, and that would certainly shrink those sales to some extent, because once again they're getting offers out of South America. They're well below the U.S. offers on price. On the week, March corn up a penny at 6.76. New crop December down 2 at 5.96. March soybeans 15.06 down 22. New crop November 41 lower at 13.52. March Kansas City wheat up 4 on the week at 8.48, so just a two-sided trade, lower early. There was some spread trading late in the week where when the beans got under pressure, they were unwinding the spreads and buying the wheat back. New crop July is into the 8.35 unchanged on the week. February crude oil up $1.45 on the week, closing at 81.31. Lower livestock futures in all sectors. The hogs were lower. They were off the midweek lows, but the cash fundamentals continue to be weak in the hogs. Cattle were also 1 to 2 down. Depending on where you're at. Some places in Nebraska could be worse. Many of the feedlots in Nebraska are struggling with very severe mud conditions, and that certainly got worse this week. And some have kind of lost patience and really struggling with the whole situation. They just want the cattle out of there. So even though some bids were lower and even didn't even indicate they would take the cattle for 2 weeks, they wanted them gone. They're in that situation and piling 17 to 19 inches of snow or rain on at midweek again just made it worse. And so it's really, I think, of course, we also lost slaughter in Nebraska because of the storm that went through us. We lost a lot of slaughtered we did the numbers this week. I think in the end they'll make those up in the next couple of weeks, but it does back up hogs, or back up cattle. But at the same time, you have to remember that in the big picture, we're also probably pulling some weight off a lot of cattle, and we'll see another system move through this weekend. Kansas and another one go through Oklahoma and Texas early next week. Most of the stuff to the south, though, will be in rain, but once again, market could start to feel a little concerned about those loss of pounds. But the beef and pork product could remain very weak. On the hog side, the December monthly slaughter came out on Thursday, indicated it really confirmed the backlog. Slaughter and hogs for the month of December was down 6% versus a year ago. Keep in mind, hog numbers were supposed to be down 2%, and we're down 6%. That indicates how the weather in December really backed up because we lost the slaughter days in that real cold in the Midwest and the snow. We just lost too many days, and we backed the hogs up. I think we all like to think that we in the industry would think that those numbers would clear out next week. We ought to be getting worked through them, given the slaughter we held. I got to also mention one of the concerns you had. If we were down 6%, why didn't the product act better in December? We'd have liked to see it a little. It was decent, but it wasn't very good. And once we put this product on board, in January, it has weakened, and the lack of exports probably is the biggest answer to that problem. Is we just don't see the exports we used to see. And once again, a lot of news out of China this week with record low pork prices, and they basically recovered from African swine fever. And they have a soft market and almost record hog production given the sow numbers they have. And so I don't think their appetite for a lot of U.S. imports or any imports of pork of any significant amount are very big. And so that psychology certainly hampered the hog market and just had to pull the premium out as this cash index, dipped below the $74 level. Feb cattle 156.72 down 110. April cattle 159.92 down 97. Jan feeders 177.97 down 33. March feeders down 190 at 180.97. February hogs 77.82 down 73 on the week, off the low of the week. April hogs 85.72 down 155.
And that is Darrell Holaday, Country Futures in Frankfort, Kansas. You can always learn more at countryfutures.com. Do remember, though, trading futures options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.